Now, here's the host of Good as Gold, Nick Grovich.
It's Nick Grovich. I'm here back in Phoenix today. I want to mention first that this Saturday, February 20th, I'll be joining Steve Jurich and Sinclair No for Retirement Workshop. That starts at 10 o'clock. It's at the Scottsdale Center for the Arts. You'll need a reservation to get in. Steve's taking care of the details, I guess, but you can call my office at 480-553-5282. It's 480-553-5282 and make a reservation. You will need a reservation to get in. It's just going to be a couple hours long. You'll get a lot of information. Sinclair No always adds a lot of fun to the workshop. So, it's a good opportunity to come out, meet Steve, meet me, talk to Sinclair. What I'm going to be talking about is, of course, the precious metals, and a little bit about rare coins, but mostly the precious metals. And with gold moving up the last couple months, there's a lot of questions, a lot of renewed interest. It's a lot different than it was 6 months ago. So I'm going to talk about the safest ways to get into metals if you're interested in metals. I'm going to talk about things maybe you should look out to avoid, because there's a lot, whenever metals go up, there's a lot of dealers out there hawking different coins and different ideas. So the big thing that I'm going to talk about is whether you should be getting in the market at all. And if you do decide to either get in or add to what you have, what's the safest way to do it? And of course, you want to make sure you own the right types of coins. We talk about that a lot. So many people that got in the precious metals, especially gold market in the last 20 years, were sold the wrong types of coins. And even though gold went from $256 an ounce to $1,900, a lot of people actually lost money. So if you're getting in, I don't know if the market's going to go from 1,200 to 1,500 or 2,000. I don't know where it's going. It does look pretty good right now. But it's important, if you're going to get in, to own the right type of material, so that if it does go up the way that you expect and you do want to make some profits, that you're actually able to do that. Of course, precious metals have been making news the past few weeks. Today, gold's up $25 at $1,235, which is pretty amazing after most of last year, everyone predicting $1,000 or less in the gold market. And we talked about that too. Gold's gone through a major transition. Last summer, it was just trading as a commodity, and most commodities were really down in value because of the world economy, especially China. And so gold, silver, platinum all really went down hard with the commodities market. Recently, with all the ups and downs in the stock market, the stock market was down well below 16,000 last week, and now it's up 1,000 points. So it's kind of like a roller coaster, and it's making people really nervous. Now, I'm not qualified to tell you about stocks and tell you, give you my perspective on the market, but I can tell you it's making people nervous. I can tell you at American Federal, we're selling more gold in the last month than we usually sell in 6 months. So there's a lot of people that are really looking for alternatives. They're really looking for something different. Gold was up to $1,260. It sold off down to about $1,200. Like I said, today it started off real slow. It was up $1 this morning, and the last I looked, it was up $25 at $1,235. So that's a pretty nice bounce for a one-day move. A couple of months just makes a big difference. December, gold was under $1,100. It was about $1,080, $1,050, and gold buyers were really discouraged. They were in despair. Nobody wanted to buy. Nobody wanted to do anything. And 2 months later, it's all changed. Silver was $13 and change. Now it's in the mid $15 range. Platinum's up $100, and that's an industrial metal. I don't want to go through charts because I can't really show them to you. It's really hard to talk about charts, but the charts on gold look really good right now. Even platinum, which, like I said, got hurt because it's such an industrial metal, platinum's looking really good too. It's joining the party with gold and silver. And, we talked about platinum a lot in the last couple of years. And like the other metals, it came down pretty hard, but I do believe that platinum is going to be one of the best performers, maybe not in the next 6 months, but over the next 4 or 5 years. The question, of course, is what happens now? The metals seem to have broken out of their downturn. The market looks really bullish, and of course, everybody asks me, "Well, is it ready to run away?" And as much as I love selling gold, silver, and platinum to people, to you, I just can't sit here and say that gold's going to run from $1,200 to $10,000. Believe it or not, there is a newsletter writer saying gold's going to $10,000 and silver's going to $300 by September. That doesn't happen very often. If you look at these markets, once there's some momentum behind it, you do get some impressive rises in price, but it's very, very rare that you see it just go parabolic and go straight up in that short a time. So no one knows. I think we could see a nice rally this year. I don't disagree with people saying we could see $1,500 in the next 6 to 12 months. But remember, there's going to be ups and downs all along the way. Nothing. Gold rarely goes straight up. You can see it's been very choppy. We went from $1,130. We ran all the way up to $1,260, then back down to $1,200, back to $1,235. So it's kind of a choppy ride. And I guess what I'm saying is just because gold looks good right now, and it's been the best performing asset probably for the last 2 months. We're only 2 months into the year, so you could, it depends what day you compare it. It could be down one day, it could be up one day. I wouldn't run out and just sell everything and put it all in gold, I guess is what I'm trying to say. Don't act emotionally. Think about it. Think about what you really want, what you're comfortable putting in this market if you want to get in it. And I would start buying on price dips. We're $25 lower. When I wrote this morning, we were $50 lower than what the recent high was. Now we're only $25 lower. So it's today's lower than the high, but it's not a day where we're down $25. I always like buying on dips. Maybe it's because I like to pinch pennies, but if you're interested in getting in, sometimes it's not worth saving $20. I have clients who wanted to get in at $1,130 and they hemmed and hawed around. Next thing you know, it's $1,160. Then they're waiting for it to go back down to $1,130. Next thing you know, it's $1,180, then $1,200, then $1,260, and then they pull the trigger, and then it goes back down to $1,200. So, sometimes you try and save $20, and it costs you $100 to do it. So, just like I said, keep in mind that it's not something you have to run out and dump everything you have in the gold, silver, or platinum right now. If you're interested in getting started, you can call the office, 480-553-5282. Talk to me or one of the guys, and we'll let you go slowly and get your toe in the water. If you're already experienced, we'll sell you what you want. We'll tell you the best buys out there, the safest things you could buy. The other thing is we have a pamphlet called "Protect Your Wealth with Precious Metals" that I wrote last December. It's a basic booklet, tells you some of the things to watch out for, some of the safest ways, best ways to buy gold, silver, platinum. Again, you can call the office, 480-553-5282. Ask them for a copy of Protect Your Wealth with Precious Metals. It'll give you some of the basics and tell you some of the things to watch out for. When we get back, I'm going to talk a little bit more about gold. We're going to talk a little bit about the coin market also.
Once again, here's Nick Grovich.
Okay, I'm back with you. We were talking about the current gold market, and I'm talking about gold, but this what I'm saying applies to both silver, platinum, and of course gold. So sometimes I guess I just get stuck saying gold, but I'm talking about precious metals in general. Like I said, we're in a market where it does make sense, I think, to accumulate again. I try and pick days where there's a little pullback. Save yourself, if you save yourself $25 or $30, that's basically what we make on an ounce of gold. So you're saving the cost of the markup or the fees when you buy. So, if gold this morning was a better time than right now, I suppose, because we're up $25. But if you'd have bought this morning, that $25 would have covered your expenses for buying that ounce of gold, or just about covered it. What's changed in the gold market? is that gold now is seen as a safe haven again. It's not just a commodity. One big change is that now there's a feeling the Fed is much less likely to raise rates again this year. In fact, only about 30% of the traders out there think there's a chance for even a single rate hike this year. That was a big deal last year. We came on every week. It was a different story. Oh, they're going to raise rates. They're not going to raise rates. In the end, I think they raised rates. I don't think it was a good idea to raise them. The rest of the world's lowering rates and instituting more quantitative easing, and the United States is raising rates. I think it had more to do with the Fed trying to preserve a little credibility. All year they kept saying they were going to raise rates. By the end of the year, I think they just had to do it because they said they were going to do it for so long. So you never know, they can do something like that again, but most people right now are betting against it. That should help support gold and the other metals. A lot of the sell-off last year was in anticipation of much higher interest rates, and instead we got that one rate hike. And now that, like I said, now that they're looking for a high probability of no interest rate hikes, that's really good for gold. In Europe, in the meantime, there's a move towards negative interest rates. What negative interest rates mean is that you're going to pay the bank to hold your money. I don't know too many people who are excited about that. Of course, if you're borrowing money, I guess that's a good thing. But let's face it, most of us don't get the preferred rates that the big borrowers get, so we don't really benefit all that much by that. What it really does, it really hurts. It hurts retired people. It hurts people who need an income, because at negative rates, like I said, you're paying the bank to keep the money there, and it really discourages people from saving money. That's another positive for gold, because if you're paying a bank to hold your money, it's costing you money to have your money in the bank, right? So a lot of people look at physical gold, or even margin gold, and they take into account the cost. So you have a cost of storing gold unless you take it and put it in your house. You have a cost of margins. You have certain costs involved with owning gold. So if you have a cost involved with holding cash, the costs of owning gold are kind of offset. It makes investors a lot more willing to own gold. So that's part of what's pushing it too. I think it's a really bad idea that they punish people for saving their own money. In December, here's another thing that happened. In December, the large speculators, the gold futures holders, had a paltry 20,000 net long contracts. That's a very tiny amount of contracts net long. That means that very few people were bullish in December, as we already know. That number is now 100,000 contracts. So what that's telling you is people are getting more bullish on gold. Now, these are indicators. I'm not going to go into detail, but these are one of the indicators that a lot of traders look at. They look at how many contracts there are long, how many contracts short, and generally, like everything else, when everybody's betting it's going down, it goes up. When everybody's betting it's going up, it goes down. So, at 100,000 contracts, that's not considered an aggressive amount of contracts. Aggressive long speculation would be maybe around 250,000 contracts. And it's, like I said, it's just a gauge of whether the market's overbought or underbought. So when we had 20,000 long contracts, net long contracts, that was an indication that the market was undervalued, basically. If we get up to 250, 300,000, that might be an indication that maybe it's overbought and we're due for a pullback. And again, people who trade this, they've got dozens and dozens of different indicators. This is one indicator that they look at. And again, I've been talking about gold, but all the metals are benefiting, like silver, platinum. The scenario is the same on all the metals right now. If you want more info on what you should be buying, or if you're just looking for information, call the office again. Ask them for the Protect Your Wealth with Precious Metals brochures, 480-553-5282. There's a lot more information in this booklet than I could really go over on the radio right now. It's only about 20 pages long, so it's really quick, but I guarantee you, if you're not real sure of what you're doing, you'll save some money by taking some of the tips in there. One thing I will talk about, and I have talked about a lot, is what coins or bars you should buy. If you look at the metals and coin market, it's become a very sleazy place. It used to be 30 years ago, you could call a precious metals dealer, a coin dealer, and, you usually got somebody who owned the place, who'd be in the market for a long time. They give you their opinion, good, bad, or indifferent. And I know dealers are in this to make money. I mean, I'm here, I go to work every day to make money. That's why I get up in the morning. I don't run a business just for the fun of it. But I like to think I'm giving people really good information, not just trying to get rich on every transaction. Many, not all, but many of the bigger dealers need to sell coins or products that they're making 20, 30, even 40% profits on. And that's great for them. And maybe if they were selling a refrigerator or a car, I'd say, it doesn't really matter. But I get they're trying to make as much as possible, but you're paying too much. You're just paying too much in a lot of cases. And most of my clients are trying to protect their money. Some people have a big stake in metals and coins. I have clients who have millions of dollars. I have clients who have, hundreds of dollars. It's the whole gamut. But, to some people, $10,000 is a ton of money, and to some people, $2 million is a lot of money. So if you have a big stake in it, especially, you can't get ahead if you have a third or half of your money goes into paying fees and commissions and markups. You can't recover that. It's very, very hard unless the market makes one of these huge runs. For example, when gold went from almost $300 to $1,900, at one point gold was up over 650%, and yet a lot of people who bought some of these more commonly sold, I call them rare coins, are really not rare coins, things like St. Gaudens, $10 Indians, $2.50 Indians, that type of thing. They were lucky if they were making 100% or 200%. So, if you pay too much up front and you buy the wrong things up front, you need a huge move. That's a 600% move just to double your money. That makes no sense to me. Here's one example. I had a client come in who was buying from another local company. He spent over $100,000 of his retirement money. And this was back in 2008, so he'd still be ahead if he had bought gold. And I valued the coins that he had. He had $2.50 Indian head gold pieces. He had $10 Indian heads. He had other common collectible coins, and the value of that portfolio is less than $44,000 today. So, part of that is because the type of coins he bought just didn't hold their value, but a huge part of that was that the markup, we figured the markup was probably about 42%. And it's real easy for us to do that because we've got the price sheets going all the way back to 1963. So people come in and they say, well, how'd the market fall that much? My dealer told me he's only making 10% or 15%. And, we can pull out the price sheets and we can see what they're marking it up. And like I said, this isn't the only client who came in from this particular company, and the average seems to be about 42% markup. And that's even when we pad the price sheets. We'll take a coin let's say the price sheet says it's $1,000. We'll say, well, maybe they paid $1,200 or $1,300 and overpaid for the coins and marked them up from there, and it still comes out to 35 to 42% markup. So you have to be really careful about what you buy. The odds of these coins ever going back up to that price is very, very poor. The reality is they were never worth $100,000. They were probably worth $60,000 when he bought them. Another lady came in. She spent $15,000. This was really bad. She spent $15,000 on 4 coins, and this was also right around 2008. Her coins are worth $3,300 now, and it was interesting because her comment was, well, she was going to go back to those people because they hadn't taken advantage of her. They hadn't, excuse my language, screwed her yet. And I said, well, they sold you a coin for $4,300 that's worth $15,000. Anyway, we'll be right back after this break.
Once again, here's Nick Grovich.
Nick Grovich back with you. Some people ask me, why do I tell all these horror stories about all these poor people who lost so much money? I think what I'm trying to get across to you, it's so much easier to own the right kind of material up front rather than buying the wrong thing or not knowing you have the wrong thing. That's even worse. And then after the fact, like this lady, she's going to go back to the dealer who took advantage of her the first time. They sold her one coin for $4,300. That coin hasn't been worth over $1,700 in the past 20 years. And they charge her $4,300. So she's got to more than double her money just to break even. That's not an investment. I mean, if you're a collector and you love the coin, that's one thing, but that you cannot count that as an investment. But she's going to go back to the dealer who sold it to her because she says, oh, they'll feel guilty. They'll take care of me. I'm going to really, really pressure them to get me my money back. Well, look, if they didn't care when they sold you a coin for more than twice what it was worth to start with, they're not going to care now. That broker who sold that coin has spent that commission money. It's long gone. He might be long gone too. And so now you're going back to a company, that money's gone. The person who made it's probably gone, and expecting them to cough up more money. I mean, does it happen once in a while, but not very often? Isn't it? I just say it's so much easier to just have the right type of material that you're not dependent on any one dealer. Even the material we sell, most of the time we're selling bullion coins like eagles or bars or maple leafs, that type of thing. You know, you can go anywhere and sell those. You might get $10 more or less depending where you go. Maybe a coin shop pays you more, or maybe they charge you $25 less. But you're talking about making or losing $10 or $25 on a coin if you sell it wrong, rather than losing $2,000 on a coin or $3,000 on a coin. So it's something that's very liquid. You want to have something that's very liquid, something you can go not anywhere, but anywhere reputable. You could go to a coin shop, you could go to any dealer online, you could go to any of the major dealers. And if you have a gold eagle or a 1 ounce gold bar, everybody's going to pay you, like I said, within $20 or $25 of each other. So your risk is really, really small, and your liquidity is great because these are things you can call, you can sell them whenever you want, you can buy them very easily. You don't have all this slush in the rare coin or the collectible coin market where dealers are going to value the coins. I mean, like this coin, it's a $1,700 coin. She paid $4,300. Now, if that's something she really wanted, she probably could have bought the coin for $1,900 or $2,000 from someone who's making a smaller markup. But she didn't shop. She just took a broker's word for it. She bought it, and now after the fact, she's chasing after them, trying to get her money back. And like I said, it just doesn't work. And that's why I tell you all these horror stories and all these poor people's sad stories, because right now, gold down around $1,200. If you own coins, anything but bullion. Now, what do I mean by bullion? They can be 1 ounce gold bars. They can be gold eagles, gold maple leafs. They can be Krugerrands. They can be Philharmonics. I can't list them all because there's so many of them. Those are just bullion coins. They're going to trade every day based on the price of gold. Same thing in silver. You can buy 90% silver. You can buy silver bars. You could buy silver eagles, silver pandas. I mean, there's a long list of coins you can buy. And you're just going to be a lot safer. You're going to have a tiny markup. I mean, generally that kind of material is marked up 3%, maybe 5% on silver if you buy small quantities. So you're not taking a big risk, and it's something that's easy for you to price out. It's easy for you to watch, and most importantly, if silver goes back to $45 an ounce, it's really easy to sell. Same with gold. Gold goes back to $1,900, and you want to sell some gold eagles or gold bars. You pick up the phone, you make a phone call, and you say, "Hey, Nick, I've got whatever number, 20 1 ounce gold bars. What do you pay me for them?" You're locked in on the phone. These coins, they're not only don't they go up as well, they're just not liquid. So one thing I will tell you, if you do own coins, any type of coins, it's really worth getting an update. If you call our office, we're glad to give you an update. We can show you how they did during the last run-up. We could show you what they're worth. We could show you what they were worth when you bought them. Give you the whole picture, and then you decide, does that make sense, or does it make sense to put it in something like gold, silver, or platinum right now, just in the bullion-type coins or bullion bars, so that you're all set when the market does finally move back up. You're all set to go. You don't have to worry about all this and chasing after a dealer. Another question I had, actually, believe it or not, I got an email from Slovenia, and he had a list of questions, which I didn't bring with me, but one of his questions was about European gold. Naturally, he's in Europe, so he's asking about European gold. And there's kind of a two-part answer to that. European gold would be the Swiss or French 20 francs, the Belgium 20 francs, the Italian 20 lira, British sovereigns, that type of thing. And most of this was made from the 1930s all the way back into the 1700s. Now, yeah, the reason there's a yes and a no, they're very odd amounts of gold. For example, 20 franc is 0.1867 ounces of gold. So it's a really odd amount of gold. But you have to remember, it was based on what 20 francs was worth in gold when they made the gold coin. So that's why they're very odd numbers of gold. Even like a $20 gold piece, $20 St. Gaudens or $20 Liberty, those are not 1 ounce coins. Those are 0.9675 ounces. So people always think, well, I've got an ounce of gold. Well, it's close to an ounce, but not quite. But it's based on what $20 of gold was at that time. So they're all odd amounts of gold. And sometimes dealers will just say, well, it's a quarter ounce. Well, it's not a quarter ounce. It's less than a fifth of an ounce. I'm talking about the 20 francs or 20 lira. So that's one thing you have to be aware of. You've got to keep track of how much gold is in it. The other thing is a lot of these coins, like I said, even going back to the 1700s in some cases, a lot of them are just worth, or most of them, I should say, are just worth the amount of gold that's in the coin. And, when I say just the amount, it might be $3 more, $7 more, but it's not a big premium. It's a very, very small premium. So if you like those coins, it is a cheap way to buy gold if you're buying it based on the gold content. The problem you run into is, I know there were some big dealers, I don't know if they still do now, but I read about it all the time online. Because they're older coins, they sell them as if they're rare coins. So, a 20 franc today, I'm just going off the top of my head, is probably about $230 coin. And they'll be selling it for $400. So you still get stuck with that 40 or 50% markup if you don't understand what you're buying. But if you understand those coins, there's nothing wrong with buying those either. They're basically bullion coins. And, the reality is, if you've looked at what's happened to the U.S. coins, the pre-1933 gold coins, the $10, $5, and $20 coins, that's where they're headed. They've been losing their collector premium steadily for the last 20 years. I've been able to buy St. Gaudens for as little as 6% over what the gold's worth. If you have damaged coins, maybe they're worth 3 or 4% over. So even the high-grade coins, MS64 St. Gaudens, which have, about $1,150 worth of gold, and an MS64, which is a decent grade. It's not a rare coin, but it's a decent grade. They're available $1,350, $1,400, so very small premiums. And the thing is, people want you to buy those and say, well, the premium is historically low right now. So when the premium picks up, when the collector value picks back up, you'll be making twice as much money. The problem is that's not what's going to happen. That's not what's happened since 1989, I guess. The premium has just come down. Why has the premium come down? Well, so far, PCGS and NGC have graded over 2 million of those coins. So to call that a rare coin is kind of a misnomer. It's not really a rare coin. It's barely a numismatic coin. But for some reason, I think because it's a U.S. coin and it's old, it should be worth something. But I see the day in the future where these are just going to be traded like the European coins. They're just going to be based on the gold value. And actually, in some ways, that'll be better because then you'll actually be able to sell them when you want to. Right now, even though they don't have much premium, you can't sell them. You can't sell 100 at a time or 1,000 at a time. So not only are you paying this big premium, but you can't sell them when you want to. And believe me, I had one client with at the time, about $700,000 worth of that material. She actually called when gold was $1,900 and wanted to sell them, and we couldn't get them sold. I wasn't going to buy $700,000 worth of gold coins of that I couldn't offset in the market. I wasn't going to buy $700,000 worth of collectible coins and just hope that gold stayed at 1900. So it was a matter of me trying to find someone else to buy them, another dealer or a market maker or something like that. And, I called around for about 2 hours. I could get no one who would confirm a price, in other words, lock in the price. And of course, the market didn't stay there, so she never did get out. Now she's sitting on, I don't know, about $320,000 worth of coins now. So, she had the right idea. She bought gold. She just bought the wrong kinds of gold. And then when she called the top of the market, the absolute best day she could have sold, and she couldn't get the coin sold. I'm not the only person she called. I know 2 other dealers that she called to try and sell them also. And nobody's willing to step out and buy that kind of quantity of semi-numismatic coins when the market's at its peak. So she got stuck. If she had eagles or gold bars or Krugerrands or anything like that, it would have taken her less than 2 minutes to sell off $700,000. It really would not be that big a deal. So, I guess I gave away a lot of what I was going to talk about, but if you're in the market and you have anything but bullion coins, please get those evaluated. Find out what they're really worth. Find out how they did last time, and then take a really close look at it. I get people that are embarrassed because they say, oh, I don't want to admit I did such a thing, or I got talked into it. Usually it's because you had a good broker and he made a really good case, and he got you on an emotional day and he talked you into something. But ignoring the problem is not going to make it go away. So you should get them looked at and make sure that you're in the right kind of material. Looks like we're coming up on a break here in a few minutes. I'm going to talk a little bit more about rare coins. I was going to talk about IRAs. There's a big problem with some of the IRA products being offered, but maybe we'll save that for next week. We'll talk about rare coins when I get back, some of the things to watch out for in the rare coin market, some of the good things, bad things, a lot of things going on there, a lot of records being broken, a lot of people talking about how great rare coins have been the last couple of years, and that's true if you happen to own the right coins. Problem is, most people just simply don't own those coins. So we'll talk about that. We'll talk about the fun show and the Long Beach show that I was at last week. Saw some very interesting coins trade hands at the Long Beach Coin Show. I was only there for 1 day during dealer day, but it was a pretty interesting show, and I'll share that when we get back.
Once again, here's Nick Grovich.
Nick Grovich, I'm back with you. Just a little update on gold. We're up to $1,241 now, up almost $32 on the day. So it's been a lot bigger day than what it started out as. Silver's up 26 cents, platinum's up $4. Palladium's down $10, but not too many people are holding palladium. Anyway, what I wanted to talk about a little bit too was the rare coin market. And one of the reasons I like to talk about rare coins is so many people hear so many different things, and some people think they own rare coins, and they really don't. And there's always been this idea that rare coins and precious metals are linked. And I guess it's probably because soon after gold was legalized in 1974, the gold market made a big run up, of course, in 79. And the rare coin market ran up also at that same time. I'm not going to go into all the reasons why the rare coin market ran up. Part of it probably was because the bullion markets went up, the precious metals markets went up. But ever since then, dealers have always said, well, when gold goes up, rare coins go up. That was one time. That was a one-time deal. Then when gold went up throughout the 2000s up till 2011, rare coins did very, very little. So we had one bull market with gold where rare coins went up, but they really went up for a lot of different reasons. And then we had the second major bull market in gold, and rare coins did nothing. In fact, they probably lost value. So to assume that rare coins go up with gold, you can't tell. They did half the time, they didn't half the time. So there's not an always there, I guess, when the market's only gone up twice. But there's a lot, one of the I can't think of the word. One of the things they always say about rare coins is that you always buy the best. You always buy the best quality, and those are the coins that will do the best if the coins go up or when the coins go up. And when I was collecting back in the late 60s and 70s, of course, when I was a kid, you couldn't really afford the best, but you did as well as you could, and you'd always read, and you still read about it today in various collector magazines about all these high-grade coins that do so well in price. And with the grading services, it's kind of gotten out of hand because the grading services grade anything. They'll grade your silver eagles, they'll grade your gold eagles, they'll grade your Lincoln pennies, they'll grade your state quarters. They don't care. They make money based on how many coins they grade. So they just keep grading more and more and more coins, and that's how they make money. So it's kind of gotten a little, in my opinion, it's gotten a little out of control because there's also this thing called registry sets where you can register with with either NGC or PCGS, and you can feed your ego by having the best set of anything. And I don't know, to me, having the best set of Susan B. Anthony dollars just doesn't matter to me, or the best set of state quarters, or they're modern coins. You go out and they're still in your pocket. They made hundreds of millions of these coins, but people do it because they want to own the best. So just to give you an example, so I'm looking at Coin Dealer or Coin World newspaper. And this is a recent copy, February 22nd. So they always have a current value market analysis, and they show some of the crazy coins that go for high prices. So here's a 1979 Susan B. Anthony dollar. I can't sell those coins for $1.10. And you have to remember they made hundreds of millions of these coins, and how many have you ever seen and changed? Probably 2. That means all the rest of them, the other 898 million coins, are still uncirculated in rolls somewhere. What I'm getting at is there are hundreds of millions of these coins out there, and I would think very few people would think to send them to a grading service. Why are you going to send a coin that's worth $1 to the grading service and pay them $20 to grade it? You're probably not. Well, now you probably will, because this variety of a 1979 Susan B. Anthony dollar was graded MS67 by PCGS, and it sold for $3,000 at auction. I guarantee you the person who bought that is working on a registry set. He or she wants to have the greatest collection, and they paid $3,000 for this coin that if it was not in the holder, you couldn't get $1.25 for. So it's when the music stops, whoever's left holding the coin is going to be really sorry, because what's going to happen now that this is common knowledge that one person paid this kind of money, everybody's going to go look at their Susan B. Anthony dollars and try and get an MS67 coin. They're not well-made coins, so there's probably not a ton of them out there, but I guarantee you out of 900 million coins made, there's a lot more than a handful out there. So this will spur people to go out and grade these coins, and once they grade 50 or 100 or 200, guess what? That coin's not going to be worth anything. Then there's a 1981 S Susan B. Anthony dollar. It went for $423. It's just insane to me. So the thing you have to look at in rare coins is it has to be a combination of rarity and quality. So for example, when I was at the Florida show, the fun show in January, I saw a 1796 quarter in MS65. Now imagine that, 1796 quarter. They didn't make that many. I mean, you're talking thousands of coins, not millions of coins. And this coin somehow survived in MS65 condition. If you don't know what MS65 is, that's actually a very high quality for an older coin. Until we got all these modern coins that grade MS68, 69, 70, 65 was always considered pretty much the top of the heap up until really about the mid 80s, even into the late 80s. MS65 was considered very top quality. So So here you have a coin from 1796 that survived. Now this is a very historic coin. It's a very rare coin. Lots of history involved. That coin went for $350,000. I saw it trade hands for $350,000 in a private sale. In Long Beach, I saw a $4 Stella. They only made those for a couple of years. Very low mintage, hundreds of coins, not thousands of coins made. And I saw one of those sell at Long Beach for over $400,000. So those are truly rare coins. Those are great coins. To buy a Susan B. Anthony dollar for that kind of money is just crazy. But what you have to watch out for is now they're grading silver eagles, gold buffaloes in MS69 and MS70. Well, just about every coin that comes from the mint is a 69 or a 70. They consider a 68 a reject on modern coins. And they'll sell those as if it's a high quality coin and you just have to buy it because of the quality of the coin. I saw an ad selling 10th ounce gold eagles for almost $200 a coin. It's a $120 coin, but they were graded MS70, and the whole pitch was, well, in MS70 they're very rare. Give you an idea, NGC has graded over 8 million silver eagles alone. I don't know what the number is from PCGS, but 8 million coins in MS69 and MS70 holders, not too rare. So if you just have to use some common sense when you buy coins. Don't believe everything you read. Don't believe the hype. You might get lucky, but it's not likely because the dealers know a lot more than you do. So my recommendation, as always, just keep it simple. Unless you're really a collector, keep it simple. Buy bullion coins, eagles, maple leafs, that type of thing, and keep yourself safe.